irrespective of the fact that they were in election zone territory. We've seen a Reserve Bank last election, notably raising rates in an election campaign cycle. Why are banks so tepid, so nervy?
Well, I suppose, at the end of the day, whether they do it this month or next, it comes down to their overall cost of funds. The banks are confronted with a pretty, an enormous borrowing task over the next 12 months. I think there's around 150 billion of bank debt maturing in the next 12 months. And that overlays a bit of a bubble in corporate debt maturities as well next year.
So there's about 130 billion of debt for corporates expiring inside the next 3-year window.
Yeah, so I suppose the potential for their cost of funds to blow out or to increase is real.
And what does that do to earnings?
Well, it has an impact. I think, obviously, you've got to overlay the economic cycle, and we might have some relief in credit spreads by that time. But yeah, definitely these things, they do have to, I suppose, increase margins on loans or to recoup those margins.
Jim, what do you think the effect might be on the markets this week if we actually have Julia Gillard, the Prime Minister, call the election? What action are we likely to see?
Well, I don't know. I think what we're seeing sort of broadly across the world and here is there's a little bit of a positive tone emerging, I suppose. We've seen credit spreads coming in. We've seen sovereign debt start to sort of creep in from those extremes. So I don't know that the calling of an election is something that would be that much of a surprise. I think probably the dilemma for the people calling the election is, of course, this RBA meeting in early August in the midst of the election campaign.
Sally, can we just bounce back to you on this one? Jim was talking about those credit spreads, and it was interesting overnight, a Fed official, Duke, out saying that he doesn't know of any way to force banks to lend any excess reserves. Now, if that's coming from a Fed official, an admission like that, what is that telling you?
Well, I think the Fed Governor, Elizabeth Duke, essentially she was saying that, one of the issues, I think, facing the Fed and the broader macro environment in the US is that supply of credit into the small business sector. And, it's interesting when you look at an indicator like the ISM, which effectively records, sentiment for big manufacturers versus an index of sentiment for small businesses, they're quite divergent. And when the ISM really started to rebound in the last sort of 6 to 12 months, that wasn't really replicated in sentiment for small businesses. And I think part of the big issue there was the fact that these small businesses were finding it very, very difficult to access credit. And I would argue that, given what's playing out in the US, given the constraint on bank balance sheets, given funding issues, and given some residual concerns about the macro backdrop there, declining inflation, rising or elevated unemployment, it's going to be a long time, I think, before that situation sorts itself out. And it's sort of, time is the best healer, and I think that's probably going to be, very true for credit into small businesses. And as the macro environment over there gradually starts to improve, then I think, you'll see there's a strong element of cyclicality to bank lending standards, and the credit supply, into small businesses will start to accelerate again. But I think it's probably something that officials over there are going to have to be very patient about it. But eventually it'll come, but it'll probably take a lot longer than it has in previous recoveries.
Can I switch from the small end to the big end, though, because there was a really important Treasury auction overnight, $35 billion worth. Fairly successful, Jim?
Yeah, it's. I think it's the lowest yield ever on a 3-year Treasury auction, but and it was well supported, 3 times oversubscribed. So. That's a very promising result.
There's a couple of other auctions this week, of course.
There are. We've got a 10-year, I think it's tomorrow night. We've also got 30-year auction. Those are smaller in size.
I guess there's no contest from what you've just said there, Jim, about the ability of the US to raise capital, but it's those European countries. People saying that the Greek auction is going to be the real litmus test when it comes to Europe's. It is Europe's sovereign debt issues. How are you judging that?
Yeah, look, that's right. It's a really it does have the focus of the world. I suppose it's a very short-dated note that they're issuing a 26-week note, 1.25 billion, not very large. One would think that it's already placed, and I think it would be good if it sort of placed below the secondary market.
Because it comes ahead of bank stress tests as well. So I guess you lay one on top of the other, you start to kind of just get a little more sense of stability.
That's right. I think there's an argument that these stress tests are more a placebo than any sort of cure. But they do play an important role, and it's all about,
isn't it?
It's about transparency, and it's about building the momentum.
Okay.
Talk about confidence. Sally Old, in the last few weeks or so, we've had Asian central banks starting to normalise policy. What do you think that says about the growth in this part of the world, which we're really far more leveraged to?
Yeah, I think it's an interesting sort of dynamic because certainly the pattern in the developed markets like Europe, UK, Japan, the US, has certainly been that Fed or central bank expectations have been, continually pushed back. So, for example, at JP Morgan, we don't think the Fed's going to do anything for pretty much the rest of this year and pretty much all of next year. So it is interesting, and I think it's definitely a positive sign that we've seen the Central Bank of India, we saw Malaysia, we've seen Korea, potentially see Thailand this week as well, all start to normalise policy. And I think that speaks volumes about the underlying economic fundamentals in the Asian region. But it also tells you that probably somewhere there's just a general level of underlying uncomfortableness with a lot of the policy settings across Asia being at still levels associated with the crisis in sort of 08 and 09. So the fact that policymakers want to start normalising policy, I think, should be viewed as a vote of confidence for the region and certainly a positive medium-term story for the Australian economy as well.
How much is that positive news, though, being offset by big concerns out of Japan as well? Upper house elections, big falls for the governing party, a debt deficit situation that now looks as if it's hanging by a wire. How do they really slash and burn if there's not cross-party support?
Yeah, well, I mean, obviously the political situation in Japan isn't exactly optimal for, achieving, some degree of fiscal consolidation. So it just makes a task, which is already difficult, even more difficult. And that's not, that's not a positive at the margin. But look, I think the message from, the developed world where, the fiscal situation is, not particularly good, and the imperative is really there to start consolidating some of these measures. I mean, I think that the Japanese Prime Minister has made the right sort of noises over the last couple of months on this issue. So let's hope he can execute on those. But yeah, clearly the results we've seen in the last 48 hours in Japan sort of do throw some doubt onto whether that's actually going to be achievable.
And just before we have to finish off, I want to ask you both about the development of the past week as well. A Chinese agency starting to issue sovereign debt ratings. Jim, I mean, why have they done it, basically?
Well, I suppose, there's global cynicism about the rating agencies and their role through the crisis, or even leading up to the crisis. I actually think it's a good thing. I think it helps to, if nothing else, give a little bit of insight into how that very powerful force in terms of global capital flows is viewing those types of sovereign risks. Interestingly, they maintained Australia, or they agreed with the AAA rating for Australia, which is very encouraging.
Yeah, you think they're possibly a threat to the Western ratings agencies then?
Well, not so much a threat, I think that, but I do think that that their view will become important as time goes on.
Sally, we talk about scepticism about Moody's and S&P after the global financial crisis. Does that kind of outweigh the scepticism about a Chinese agency suggesting that the US has troubles and kind of doing that East versus West thing?
Yeah, well, I think it's interesting because, as you said, there were certainly some very big question marks over the integrity of the ratings agencies. And, ultimately, when you look at what the Chinese buy, they are huge buyers of sovereign debt, particularly European and US sovereign debt. So it sort of makes sense if you have a vested interest in, the underlying sort of economic and fiscal fundamentals of those countries, that you sort of sit down, pull your pencils out and do your own analysis. So in some ways it's, it's not surprising given, the way events have played out over the last 24 months. But I think it's should be seen as a positive development.
Speaking of positive developments, there was a move overnight. Some interesting news in their property market out of China. Average prices now falling for the first time in 16 months. So they've been waiting for this long heralded turnaround in what's been seen and talked about as being an overheated sector. Are you looking now to Thursday, both of you, and the data? How are you going to see that affecting market sentiment, Jim?
Yeah, well, I think the data on Thursday, I think basically is just a recent snapshot, something to digest. I don't think it's going to be completely meaningful, but yeah, just part of the puzzle, I suppose.
All right, Sally, you believe the authorities there have got it right, that they are not sort of showing knee-jerk reactions to this, damn it if you do, damn it if you don't. Stronger, then you pull back and all the rest of it.
No, I think the Chinese authorities would be probably reasonably happy with what they've achieved. The aim with some of these tightening measures was to cool the property market, so the fact that prices have come off a bit, should probably be seen as a reasonably good thing. This week's data is pretty important for us at JP Morgan. If those numbers come out sort of in the vicinity of our expectations, that's probably going to be the catalyst for us just to shave our growth forecast in the second half of 2010. We were sort of at the moment looking for something around 9.5% on year-ago rates, and that'll sort of get shaved down to something around 8.5. But for us, that's still consistent with a soft landing in China. And really, I think the way to look at a lot of this stuff is to say, if the Chinese can execute a soft landing, and we have confidence that they will, surely that's a positive for the medium-term prospects for that economy and for the Australian economy and for the region as a whole. What we want from China is sustainable growth. We don't want sort of boom-bust cycles. We want, medium-term sustainability. And if the Chinese can do this, then I think we should be looking at this as actually a good thing.
We want them to consume. It sounds like we want to have our cake and eat it too. Somehow that equation doesn't always neatly play out, does it, Brooke? Anyway, interesting.
Good stuff. Thanks, guys. Thank you very much, Sally Old from JP Morgan and Jim standing with us here in studio from Fix Securities. Thanks to both of you.
Appreciate it.